Breaking news from around the world. This is Pixel Plus, your AI-powered global news briefing. Global markets react to inflation woes and energy disruptions. A sell-off in high-flying chipmakers drove stocks lower, with the market also falling alongside bonds after inflation data showed the impacts of energy disruptions stemming from the war in Iran. This downturn has significant implications for investors, as chip stocks have been a key driver of market growth. As the situation in Iran continues to unfold, market watchers will be closely monitoring the effects on the global economy. The Federal Reserve's next move will be crucial in determining the trajectory of the market. With inflation on the rise, the Fed may be forced to raise interest rates, further impacting the market. Consumer prices climbed last month by the most in 3 years, but prices for electricity surged even more, highlighting an intensifying battle between utilities, consumers, and power grids. This surge in power prices has significant implications for households and businesses, as it threatens to erode purchasing power and increase costs. As demand for electricity continues to rise, utilities and power grids will need to adapt to meet the growing need. The impact of this surge will be felt across the economy, from household budgets to business bottom lines. Regulators will be under pressure to balance the needs of consumers and utilities. Treasuries fell as rising oil prices threatened to keep inflation at levels that could prompt the Federal Reserve to raise interest rates next year. This decline in treasuries has significant implications for investors, as it signals a potential shift in the Fed's monetary policy. With oil prices continuing to rise, the risk of sticky inflation increases, making it more likely that the Fed will take action to curb inflation. The impact of this move will be felt across the economy, from borrowing costs to consumer spending. As the economy continues to navigate the challenges of inflation, market watchers will be closely monitoring the Fed's next move. The yields on British debt pushed higher as the country's Prime Minister, Keir Starmer, confronted a rebellion from members of his party. This increase in bond yields has significant implications for the UK economy, as it signals a potential shift in the country's